Good evening. This is XFO Intelligence bringing you breaking news analysis on a developing trade situation between the United States and China that has significant implications for global markets and supply chains. The situation centers on rare earth elements, a group of 17 metals that are essential components in modern technology, defense systems, and renewable energy infrastructure. These materials are critical for manufacturing everything from smartphones and electric vehicle motors to advanced military equipment. On October 9th, China's Ministry of Commerce issued Announcement Number 61, expanding export controls to include 5 additional rare earth elements: holmium, erbium, thulium, europium, and ytterbium. These restrictions, which take effect December 1st, also extend to semiconductors, batteries, and products manufactured using Chinese-origin materials. Chinese officials cited national security considerations as the basis for these measures. The following day, President Trump announced retaliatory measures via social media, stating that the United States would impose 100% tariffs on all Chinese imports, effective November 1st. These tariffs would be layered on top of existing duties that range from 30 to 55%, potentially bringing total tariff rates to between 130 and 200% on affected goods. The market response was immediate and substantial. On October 10th, the S&P 500 declined 2.7%, the Dow Jones Industrial Average fell 900 points, or 1.9%, and the Nasdaq Composite dropped 3.6%. Cryptocurrency markets experienced significant volatility, with Bitcoin declining 15% and total liquidations reaching $9.4 billion, the largest single-day liquidation event on record. Combined market capitalization losses across major indices totaled approximately $1.2 to $1.6 trillion. To understand the significance of this situation, it's important to examine the current structure of rare earth element production and processing. China currently controls approximately 70% of global rare earth mining and 90% of processing capacity. The country also produces 93% of permanent magnets, which are essential components in many high-tech applications. The United States, by contrast, imports the majority of its rare earth elements and has limited domestic processing capacity. This creates dependencies in several critical sectors of the American economy. Defense and aerospace industries are particularly exposed. Each F-35 Lightning fighter aircraft requires approximately 920 pounds of rare earth elements. The broader defense sector faces potential supply chain disruptions that could affect production schedules and increase costs. Green technology sectors also face significant challenges. Approximately 80% of electric vehicle motors and wind turbine generators depend on rare earth permanent magnets. Supply disruptions could potentially increase electric vehicle prices by an estimated 20% and complicate implementation of clean energy initiatives. Consumer electronics represent another vulnerable sector, with roughly 70% of smartphones, computers, and other devices incorporating rare earth components in their manufacturing processes. The economic implications extend beyond specific industries. Analysts estimate that the proposed tariff increases could add approximately $2,400 in annual costs for the average American household through higher prices on imported goods. Both economies could experience GDP reductions of 0.5 to 1%, with inflation potentially rising 2 to 3 percentage points. From a supply chain perspective, current U.S. strategic stockpiles of rare earth elements are estimated to last only several weeks under normal consumption patterns. This timeline highlights the immediacy of potential disruptions should export restrictions be fully implemented. Alternative supply sources exist but face scaling challenges. Australia, Canada, and other countries possess rare earth deposits, but processing infrastructure remains limited compared to Chinese capacity. Developing these alternatives would require significant time and capital investment. Several companies have seen notable stock price movements in response to these developments. American rare earth mining companies, including MP Materials, experienced significant gains, with some stocks rising 15% or more. Conversely, technology companies heavily dependent on Chinese supply chains, including major semiconductor and consumer electronics manufacturers, experienced substantial declines. Looking ahead, several factors will influence how this situation develops. The upcoming Asia-Pacific Economic Forum, scheduled for October 31st through November 1st in South Korea, was expected to include meetings between senior U.S. and Chinese officials. However, the status of these diplomatic engagements remains uncertain given recent developments. From a timeline perspective, the November 1st tariff implementation date and December 1st effective date for expanded Chinese export controls create specific windows for potential resolution or escalation. Market analysts are projecting several possible scenarios over the next 3 months. A baseline projection suggests initial supply disruptions of 20 to 30% in the coming weeks, potentially followed by gradual recovery as alternative supply chains activate. However, this adjustment period would likely involve higher costs and longer lead times. The broader implications extend to global trade patterns and supply chain resilience. This situation highlights vulnerabilities in international economic interdependence, particularly regarding critical materials and technologies. For businesses and investors, this development underscores the importance of supply chain diversification and risk management strategies. Companies across multiple sectors are likely reassessing their dependencies on single-source suppliers and single-country production bases. The situation also raises questions about strategic resource management and national security considerations in an interconnected global economy. Both economic and policy responses will likely influence how similar situations are addressed in the future. This has been XFO Intelligence Breaking News Analysis. We will continue monitoring developments in this situation as they unfold. For our premium subscribers, detailed analysis of specific equity market implications and sector impacts is available through your private member portal. Thank you for listening.